Hello everyone, today is the 23rd of June 2021 and we are into the third day of the trading week. So in this video, we are going to run you through our 5 most focused markets: Euro dollar, gold, Nasdaq, US oil and Bitcoin. So we're going to start off with the Euro against the US dollar. So yesterday we talk about buying the euro against the US dollar as it pulls back to this level. So indeed it went up and it reaches somewhere right here. Obviously there's some supply and right now we are seeing in a pullback again, but the good news right now is that it is going up on a rising trend line, and if we were to just put it out like this, is actually a rising channel. So right now we are seeing higher highs and higher lows, so that in itself points to a bullish momentum until it actually breaks lower. So going forward is very simple. We just want to wait for a further pullback, right back to the bottom right here, or you could go a little bit lower because obviously this is the demand zone as of now, but otherwise if it goes lower, then it will definitely come back to retest the low right here at 1.1870. Right, so first level will be right here and then followed by this level. Now based on what we see, we think that there's a likelihood that once it reaches this level, the price is most likely to rebound and go even higher, because just going back to the bigger time frame, the daily time frame, obviously last week euro dollar is very oversold. All right, and on the Monday itself it rebounded off pretty strongly, and on the second day it continues and actually creates a higher high as compared to the previous 2 candlesticks. So that in itself is already a bullish reversal. But what we want to be careful of is also that because the price has broke below the rising channel here, right now the price is back to retest this level, but just that the market is so oversold, I am confident that the price will be able to pull back even further. I mean, if we just pull a Fibonacci retracement, right now it is not even at the retracement level of 38.2%. So I think the pullback is still too shallow, and therefore I am expecting it to go even higher. At least back to the 38.2% maybe. All right, right here, yes, there is a supply zone right here we can look out for, but ultimately I am looking for it to go all the way back to the equilibrium level, and that would be somewhere at the 50% pullback level, and obviously this is a stronger supply in this case. All right, so the trading plan will be as such. We are still going to wait for a buying opportunity, let's say somewhere right here. Then our stop loss will be just right at the previous low, and then our take profit target first will be back to the previous high here, or back to the supply zone, and ultimately we want to take profits only as it reaches the equilibrium level, and that will give us a 70-80 pips, which is about the average volume for euro dollar if it were to trend. All right, so that is for the euro against US dollar. And next we have the gold. So for the gold, yesterday we are also looking to buy, but unfortunately the markets went into a deeper consolidation. So if you look at it right now, it is consolidating in a symmetrical triangle formation. Right now it is back to the bottom and then it rebounded off. In fact, we just gave a trade call to buy at a low again. We just want to try it again, because if it's able to break out in a bullish manner, then we will definitely be able to see a huge jump in the price of the gold, and that will reap us a very good risk to reward ratio. And yes, that is pretty much our trading plan. I mean, I'll just go straight into our trading plan, which is right now we have already buy right here. We go to a much smaller time frame in the 15-minute charts. All right, if you just look at this part itself, and you pull out a Fibonacci from the low to the high, all right, it is somewhere back to the 61.8%, and therefore within this consolidation, we decide to go in as it pulls back to the bottom, and therefore we have already made our move. And of course, our stop loss, we try to make it as tight as possible. All right, so we are just somewhere right below this low right here, and then we are targeting first level to be right here. Why? Because obviously this is an inside bar formation and it breaks down, so it creates a supply. And if it goes up even further, then our ultimate targets as of today, I think right here 1820 will be fantastic, because that would be a gain of $40 market movement, and that is huge, right? So the more achievable one will be right here, about 250 pips or $25 gain. It is actually a very average market movement when the gold trends, but if it trends strongly, then 400 pips is nothing uncommon as well. Alright, so that is pretty much our trading plan. And just going back to the daily time frame, just want you guys to understand that the market is very oversold. Alright, it has very strong supports right here at the bottom. It is right at the 61.8% of the Fibonacci retracement based on the daily time frame. And not forgetting to mention, this time around is very different because it has already broke out of this major pullback channel or falling channel. It's broke all the way up. And if you look at the entire markets of this entire range, it is definitely trading at a low. So which is why we still maintain our bullish view on the gold itself. So again, this is our trading plan. We are already in, we have already bought, and we are targeting these two levels. Alright, next we have the Nasdaq. So for the Nasdaq, yesterday we also gave a call to sell. Alright, and yes, indeed, it actually went down first, but however, the trend is too shallow. In fact, you can see it is actually going pretty smoothly. A big drop, a strong bearish candle right here, followed by a small bullish candle, and the next thing I thought it will actually continue to go down. Alright, and potentially completing another bearish wave as similarly to the previous wave right here. But then for some reason, buyers momentum continues to pick up, and eventually it hit our stop loss at the entry. So there's no gain, there's no loss. It's quite a pity, but however, we are going to move on and see what is going on. So if you go to the 4-hourly time frame, you'll be able to see that it is right now breaking out of this rising wedge, right? So it retest, came down, and right now it has broke out of it. So it will be more obvious in the daily time frame. So yesterday it closed right above, and therefore today we think that there will be more bullish momentum going on. So in the very small time frame, let's say coming back to the 1-hourly time frame, we can actually look for an opportunity to buy. And if you were to ask me, I would say that this level would be good enough for us to consider buying it, because number one, it is very close to the top of the rising wedge. It is also very close to the previous high, and definitely you can see that there is an inside bar formation right here where the price break upwards. So, and of course you can always pull out a trend line to give you a guidance of where it's actually pulling back towards. So for the Nasdaq today, yes, we can look to buy. Alright, since the bullish momentum is building up right now. So the plan is to buy right here at about 14,240. Stop loss wise, you might want to set it just somewhere at the low right here. And in terms of the targets, you will be all the way into the 14,500 area, which is a price level I've mentioned I think last week or a couple of weeks ago, where we actually wanted to sell. Well, we'll talk about it again in our later videos, but as of now, we just want to focus for a buying opportunity as it pulls back to 14,240. Alright, so moving on, we have the US oil. So for the US oil, expecting a pullback back to this level where we see a trend line going upwards, and yes, indeed, it touches it came back down to this level, almost touching it, and started to go up. But after that, we saw that it actually went into a consolidation. It is not able to go higher, and so it went back down. Right now, it's just kind of trading within this consolidation. But we are also seeing a breakout of this consolidation as well. So very likely, it might start to go up from here. So let me just remove this first, and let's take a look at the daily time frame. So the daily time frame shows a very uncertain market. Yesterday went up and went down as well, but closed pretty much at the same price. slightly higher to be more specific, and today itself it opened lower and just goes up. And if we go back to the 4-hourly time frame, yes, it is breaking out of this consolidation, and it does seems like it's ready to go higher. So since it has already pulled back and since it has rebounded, and right now we are seeing a breakout, it essentially means that the oil price might start to go up very soon. But however, in terms of our consideration to buy, we still want to wait for a bit of a pullback, maybe back to this area. If I just readjust this channel a little bit, all right, to connect the lows, we can actually wait, for it to pull back a little bit back to this area where it actually broke out, to buy instead. I mean, that would be a much better price, right? Of course, you can consider buy right now, but then the stop loss will be slightly higher. So it really depends on whether you want to take it now or not, or you want to wait for a better price. But in any case, according to our trading plan, we will just wait, all right, for a small pullback, hopefully retest this level, all right, and having a stop loss just at the previous low, and then our targets obviously coming back to the previous high, or rather at this demand zone right here. We can see some demand at this level, and then aiming for another bullish run just like this. So we just duplicate this volume back to this level. That will give us somewhere at about 75. I mean, you can always measure the volume of a trend previously, and you could find out that a market movement of 250 pips is actually pretty average for the oil markets, especially when it trends. All right, so this is the trading plan. And last but not least, we have the Bitcoin. All right, so for the Bitcoin, yesterday we are talking about waiting for a pullback again back to this region, and goes all the way down to our targets at the bottom of this supply, of this demand zone, or somewhere about 30,000. And indeed it happened, but just that the pullback did not happen. So obviously we didn't get into this trade. But in any case, it seems to be moving exactly as how we have always forecast. So moving on, we are seeing a strong rebound, all right, from the 30,000 low. And right now it does seem that the price is about to break out of this trend line, and therefore that might attract a little bit more of buyers, but we are still going to keep our bearish view on the Bitcoin. So if it continues to go up, all right, back into this region, we can definitely look out for resistance. But as always, if it's able to pull back well and goes higher from here, I think ultimately where we really want to sell is really simply based on the Fibonacci. If you look at it, 61.8% is somewhere right here. But if you look at the breakout of this previous rising trend channel, it is actually right here. So it is somewhere in between the 78.6 and the 61.8% retracement level, which will still be a very good area for us to consider to sell the Bitcoin. So of course, on the other hand, we can actually look to buy already in terms of intraday, since it has already broke out. It's creating higher high as compared to this high. So if it's able to pull back, all right, retest this area, obviously there are some pretty good demand right here, all right, then we can potentially go for a buy. So if we were to go for buy right here, stop loss will be just below, all right, just below this region. Target wise, of course, back into this supply zone and all the way to this supply zone at the top instead. So that would be about 37,500. And so that's pretty much for the Bitcoin. So with that, I have come to the end of our forecast. Thank you for watching. Hit the like button and subscribe to our channels for more updates, and we will see you again tomorrow.